Hey, welcome to the show. Today we're going to talk about bail-ins. If you're not sure what that is, we're going to break it down and explain what that process entails and what we may see globally in the next couple of weeks, months. I'm not really sure. This is a little bit similar but different to bailouts that we had after the 2008 2009 banking crisis. And this is likely what we would expect to follow at the next financial system crash. Hey, Molly here. Today we're going to talk about bail-ins. I'll be totally honest, this is not my favorite topic of conversation because it can be a little bit scary and concerning. And that is not my goal here at all. I'm not trying to create any fear porn or anxiety. However, there are some pretty significant indicators that a major change is coming to the financial system, that the banking world as we know it is going to evolve and move to a new system, which we kind of know it's on the blockchain. But in order to sort of facilitate that change, it's very likely that they sort of have to collapse the first one and then restart on a new one. There's lots of connotations to the idea of the Great Reset, and this is one of them, that they're going to literally reset the financial system. And it might feel uncomfortable at a minimum, and there may be some serious consequences for lots of people. So, my goal here is to break down what I expect to happen, give you a little bit of perspective, and then talk about some ways that we can maybe collectively prepare so it doesn't feel as difficult as it could. All right, first, I just want to do a little recap on what happened after the 2008 2009 financial crisis. We had a series of bailouts, which means that the Federal Bank of the United States, the Fed, essentially created a bunch of new money and distributed it to large entities that were labeled too big to fail. Those now go by this label of SIFI, strategically important financial institution. And those businesses were deemed to be more important than others and were given bailouts. And those were not loans. The money did not have to be paid back. And it created a very large increase in the money supply, which eventually contributed to inflation, which we still are dealing with now. Now, I remember this very clearly, and I was pretty mad then because I worked at a company that was small. Now, didn't make gambling bets like a lot of these banks did, but it seemed to me extremely unjust that there were some businesses that were considered important, too big to fail, strategically important, and the rest of the businesses were not. And I was like, that doesn't really seem like a great way to classify things. And these banks had also made some incredibly bold, risky bets, which, I've done that kind of a thing too in my own business. And I lost and it cost me the business, where in the case of these banks, there really were no consequences. Nobody went to jail. Nobody personally was on the hook. They even were given, I remember the Goldman Sachs guys got a bunch of large bonuses that year, which was very infuriating. So that system, the bailout system, created a lot of frustration and there was backlash from many people, including me. So they created in the United States a piece of legislation afterward called the Dodd Frank Act. I wrote a thread on it. I'll put it in the description. And this essentially was a banking reform that has a couple of key differences. There's a lot in there. I'm not an expert on Dodd Frank. What I specifically want to address today is one change via Dodd Frank, which is that if there were another major financial system collapse, there would not be a bailout, there would be a bail in. And we are starting to see indicators that the bail in process may be beginning. There was a video I saw this weekend that kind of outlined that the ECB, the European Central Bank, is preparing for these and linked to a website that I spent hours reading, where the European banking system, kind of led by the ECB, has a website that they put up in 2020 talking about how banks need to prepare a playbook for bail-ins. This website was updated in the summer of 2022. It's not the easiest website to read. It's written in a lot of like legalese banking language, but I did go through it and have picked out a couple of key things that I want to talk about today. Now, before we get into how this could play out, because there's going to be it's going to suck for quite a few people. Like this plan wasn't created to benefit people like us. It might be just a necessary step because financial systems do change, and we've been through something like this before. Back in the day, they used these things called tally sticks for accounting, like literally wooden sticks that had notches on them. It was kind of like a very basic form of the blockchain in that I had a stick with notches, and if you were my counterparty, you had a stick with notches, and we sort of compared them, kind of like how validators sync up blockchain databases to make sure that they match. And if these two things match and everybody was happy, the accounting record was equal. But that became impractical at a certain point, and the sort of, we'll call it the global financial system, but the way that money was exchanged and trade was conducted moved on to a new system and away from these tally sticks. And that is what we, I think, are experiencing here, is that we've had this sort of fiat dollar system. The way money has been exchanged has become inefficient. It takes a long time to move money. And we are now in this era where technology has accelerated dramatically. And the last piece that's very slow is this money piece. And so when all of the assets, including money, including stocks, bonds, gold, real estate, etc., when all of these assets are migrated to this new system of counting, I guess is just the label that I have for it. It's sort of this new financial system where all these assets are tokenized on a blockchain and can be moved and exchanged instantly. It's going to change everything as we know it in a good way in many capacities. Uh, New opportunities for businesses will grow because now some of the problems in the current system will go away, and you can do things like micropayments and streaming payments, things that we've talked about on this channel before. But major changes like this are often going to have consequences that don't benefit everybody. And that's what I want to talk about with the bail-ins. But, I do want to just remind you that, like, as far as devastating things go, like, this isn't even going to rank for me. Even if I was on the receiving end of the sort of the worst dystopian outcome for these changes to the financial system relative to like heartbreak I've had in my life and devastating things I've had to deal with, this isn't even in the same league. So I do want to just help you keep some perspective that, truly heartbreaking things, this is not one of them. And those things I think can help create some empathy here that might be necessary. I do think that when you've gone through really difficult things, it can build character and help create a new way of being able to relate to difficult situations, and is really the difference between sympathy and empathy. So I think this new next crisis, there will be a lot of empathy born because some people are going to have a very difficult time seeing their assets, their life savings, their retirement savings, it's going to look like it disappears and is going to be converted into something else. And so if you are someone who is preparing for this like I am, there's probably going to be people around you in your life who are going to need your help with that perspective and sort of reminding you that of all the terrible things that could happen to you, like this is not this, we'll get through this one. This is just money. And I know we have a lot of emotional things tied to money, but that perspective, I think, can make the big difference between whether or not you or individuals close to you kind of sail through this seeking ways to end up on the right side, or if you let this take you down into a very dark place where you're very, very sad and upset. Keeping that perspective, I think, is going to be really important here. Okay. So what technically is a bail-in? A bail-in is when the investors in something become the owners of it. So I'll just walk you through an example. This is kind of first from the Dodd Frank, and then talk about how it's going to vary with the ECB. So in the Dodd Frank Act, if a large bank, I'm just going to pick on one like JP Morgan. So let's say JP Morgan goes insolvent and they don't have enough money. That means that their assets are not as much as their liabilities. Like they can't pay their bills. Like they are insolvent. They don't have enough operating capital to function. In a normal business, you would go bankrupt, right? And you would sort of have these assets that you have kind of sold off to the creditors. Well, with these strategically important businesses, it doesn't work that way. So what would happen via the Dodd-Frank is that the FDIC would actually step in and take over this bank. And this is my understanding of it. If you have a better understanding, please tell me in the comments. The FDIC would take over this bank, and it would create a second entity, like a mirror entity. And the people who had were investors in the bank, which is actually people who deposited like their paycheck and their money in there. You have sort of loaned the bank money when you deposit your funds in there, and they owe you. And so you are now kind of, it's probably not the right label, but like functionally you are an investor. And so now, but that entity is insolvent. It's like useless at this point. So what they would do is the FDIC would issue shares in this new entity, and kind of like stocks maybe that have to get, or stock options that have to vest, that you can't necessarily use right away. We saw this in China last year. There was a small local bank that had some problems with funding because they had loaned a lot of money out to the real estate sector, and the real estate industry in China's kind of a mess. And so all of these sort of small, rural, hardworking people went to go get their money out of the Chinese bank, and the Chinese bank is basically folded. And so they did a bail-in. They issued these people shares of this newly created bank. Now, what I don't know is how long it took to actually get those funds back and how it played out. I just remember watching it in the news when it actually happened. And we're like, oh, wow, these are bail-ins. So back to the FDIC situation in the US. So now we have JP Morgan 2.0, that if you are a depositor in there, you now get shares in there. So you're not, it doesn't necessarily mean like you've gotten nothing, but what are you going to do with those shares? What if they have to vest for a very long period, which means you can't sell them right away? Like there's a lot of uncertainty and unclarity around those rules, because I don't think they have shared those with us yet, because people like me would make videos about them. And I'm not looking to create any bank runs or panics. I just want everyone to be aware of what exactly a bail-in is, how it would work, and then you now have information that you can use to make some decisions for yourself. Okay, this weekend over the ECB stuff is that it looks like it would be fairly similar. And what they plan to do is issue something called a tokenized debt security, which sounds very fancy. But tokenized meaning it's on the blockchain. So you would get some kind of digital asset that would be stored in like a wallet. It is a security, meaning there is an agreement. There's a expectation of profit, and there is rules around who can issue those securities and how you can sell them. If you follow the Ripple case at all, we've learned quite a bit about securities, and it is not as easy as sending a payment currency to other people. So there would probably be rules about how and where and when you could sell it. Now, what I'm not super clear on, because it wasn't specified in anything I read and I looked, is what exactly are you getting a security of? Like, is it going to be shares in some sort of new entity? Could it be some kind of a promissory note type of thing? It says it's a debt security, so that implies there is some kind of loan involved. That I don't know, and I don't know if it's been disclosed. If you happen to know that, especially regarding the ECB, please share in the comments. I think, though, regardless, if you have a bank that goes under and you're going to give me shares in the new version of the bank that just went under, I'm not terribly confident that that would be like a great asset to hold. Like I would probably rather have many other things than shares in a bank that just folded. I don't know how this bank is going to make money, but it's possible. Now, related to this is a little bit of more optimism for you, is banks and central banks around the world have been buying gold for a long time. It's been published. The World Gold Council and gold trade publications have been releasing that information. We've also, as many central banks have legal requirements to disclose their holdings. Gold was also relabeled a tier 1 asset a couple of years ago. So gold is considered as good as money in terms of banks. Now, the interesting thing is that the price of gold has been suppressed. That is not a secret. I'm not making that up. I'll put the thread on that in there in the description as well. You can just Google how do they suppress the price of gold? And it's pretty much outlined that they use this process of paper gold, what's called naked shorts, and they have a mechanism to trigger a bunch of sell orders if the price gets too high to keep it corrected. So let's just, for argument's sake, say that's a fact and that the price of gold has been suppressed and there's a series of mechanisms and players involved in keeping that. We could get into why. Sometimes people thought it was really about protecting the dollar, maybe. But what if another benefit of that was it allows all of these banks around the world who have been planning for this migration to a new sort of tokenized asset-backed world, what if it just had gave them a ton of time to stock up? And so let's just, for argument's sake, say gold right now is 2K an ounce. And if I'm a bank and I've got, 200K, I can buy 100 ounces of it. They obviously have way more money than that. But now I'm able to stock up and build this supply of assets. Well, the price of gold is suppressed. So that means that the price of gold should be higher, right? We don't really know how much higher. But let's just, for argument's sake, say it's 10x higher. Instead of being 2K an ounce, it's supposed to be 20K an ounce. Now, if I have this balance sheet where it looks like I'm insolvent because I have very few assets, the value of my assets is very low relative to the value of the liabilities or the debts that I have, then when it looks like I'm in the red, well, what would happen if I just decided, maybe with some of my banking friends, that, you know what, the price of gold has been suppressed and we think it is time to fix that. Maybe they open another exchange like the Russia exchange or the Shanghai exchange comes onto the global marketplace. And in one of these exchanges, the price of gold is no longer suppressed. And now all of a sudden there's this true free market for gold. And fortunately for the banks, the price of their asset now skyrockets from 2K to 20K or even higher. Let's go say it goes to 200K. I don't know how high it's going to go. So now all of a sudden these banks that looked like they had no money because their assets were valued very low, all of a sudden, from a revaluation, they now have an abundant amount of money. And so they get to start off this new financial system in the black. They've got now plenty of equity that shows sort of health in a business. So the people who get these tokenized debt securities may get something of value if this gold gets revalued and a very high thing, and it happens to be banks who issued gold. I'm totally speculating on that. And this sort of ties into XRP too. There's been a lot of, I've spent a lot of time trying to understand the price suppression of XRP due to the SEC case. Well, let's just say something very similar happens. You have these banks around the world who have options contracts to hold XRP or buy it at a specific price. They get to buy it at that price, but all of a sudden now something happens where the price now gets corrected in some capacity, and now their asset that they agreed to buy at 40 cents a token or whatever, and now the asset's worth $50,000. This is just kind of how it could work with that in addition to gold. So now you have all these banks who right now look like they're insolvent. Right now it looks like they have to go under. They have to convert to this new system. But magically, from a revaluation, they get to actually have these very healthy balance sheets as a result. Now, what does this mean for the people who have money in these banks? It's still unclear whether or not these new tokenized debt securities will be valuable or not. They could be. I can see a pathway where that's possible. I also know that banks are in the business of making money for themselves, and there may be a way that this does not benefit us. So my approach to this at this point is not to be assigning like, is this good? Is this bad? Am I scared or excited? Do I have hopium or do I have despair? Let's just put any labels around emotion or judgment just aside for now. And at this point, I am focused on looking at all the possible scenarios and how it could play out to see like what are the opportunities for people like us to prepare for it, I guess, in lack of a better word. And what we're seeing is, the banks like gold. I think the banks like XRP. Why would they? Are there parallels between both of these assets being price suppressed? And is there a legitimate reason why these banks would benefit if the price was reset? So I know this XRP buyback thing creates a lot of anxiety and tension and emotional reactions. Trust me, I've been the recipient of plenty of it. But one thing that's come up, and it came up early on, is why on earth would they ever buy it back at this higher price? Like, they don't care about us. They're not going to give us all this money. Well, here's a reason why it would benefit them tremendously if the value of XRP at a certain point, not today, were revalued at a much higher level, because it could take these balance sheets for banks that look insolvent now and magically convert them to being, equity holding companies with plenty of assets that have a lot of worth and value. So that's just one possibility why having people love to tell me that the XRP ledger is like an open source blockchain where you can't set the price. I will just tell you with fairly high confidence level that people can do whatever they want. And if you have enough people who come together and decide that this is going to be at a certain price, and those people have power and influence, that's that's a done deal. I mean, we've seen this in the past. The price of gold has been set and fixed. You say, well, I could dig up gold in the ground and I could go sell it to somebody else for whatever I want. How can you fix the price of gold? Well, for most of the 20th century, the price of gold was set at $35 an ounce. And it didn't matter that you could go dig it up. And that didn't matter that the banks didn't own all the gold in the world. They owned enough that they controlled the market. Now, does this mean I think XRP is a sort of centralized thing? Again, I'm at the stage where I'm not really passing any judgment on this. I am looking to say, how are all the ways that this could play out? And what are the possible sort of, those like sharks that swim along and they have these like little baby fish that like swims along like underneath its, fin, whatever, catching some of the scraps. Well, let's just say these big financial institutions and central banks are these sort of sharks. A couple of us can kind of swim along and be these little tiny, recipients of the scraps. And what the scraps are in this analogy are the strategies that they are using to convert their own assets to something of higher value after this reset and migration to the tokenized blockchain. So I'm not trying to scare anybody. I think this might be rough. I'm pretty confident this is going to be rough, especially for those who have no idea this is coming, especially for those people who will feel this like reaction of panic and worry. And that's where I think all of us who are talking about this in advance can prepare and sort of help people understand what your options are. And even if somebody did lose all their money, like there are worse things that can happen. And I don't mean to belittle that experience for anybody, but some perspective is sometimes healthy so that you can have the clarity to see options and how can I rebuild? How can I react? And what are my choices moving forward? I thought we had time with this, but one of the things that's in this playbook on the ECB website is that they have told all these banks that they need to like practice, do these simulations, these test cases. It looks like there's one in France. We saw one in Cyprus in 2013. That was probably a very, very early concept test. We saw one in China last year, but this one in France means that this might be getting closer. So I'm not giving any time predictions because I'm terrible at that, and everything I thought would happen at a certain date has not. However, with this kind of thing, the more you just prepare for it mentally, when it does happen, it'll be like, oh, well, we kind of knew that was coming, so no big deal there. And that is kind of my strategy for how to look at this with a little bit of emotional distance so that if it does feel like this tidal wave, we won't get all cut up. So anyway, if you have any different interpretations on valence, please share them in the comments. I'll put a bunch of links in the description that I talked about. And if you like